Let me explain something that sounds like trade policy, but it's actually about jobs, housing, and your cost of living. Canada just made a major concession on Chinese electrical vehicle tariffs, and most people think this is about cheaper EVs. It's not. This decision puts Ontario's auto industry, and by extension, Canada's middle class, on a path that's very hard to reverse. And the knock-on effects are going to hit real estate, rents, and household balance sheets. Here's a simple version. Canada reduced tariffs on Chinese-made electric vehicles. That opens the door to tens of thousands of low-cost imported EVs, with pressure to increase the number over time. At the same time, the government framed this as a trade-off. We protect canola exports to China, and we let EVs in. On paper, the dollar numbers look similar, but economically, two industries are not even close in terms of the long-term impact. Let's start with canola. Canola is a global commodity. If China blocks it, Canada reroutes it to the US, Japan, Europe, and Southeast Asia. Margins get squeezed, farmers feel pain, but the industry survives. Capacity doesn't disappear, the land doesn't vanish, the skills don't vanish. That's a price shock, not a structural collapse. Auto manufacturing is the complete opposite. Auto manufacturing is path dependent. Once a plant shuts down, once a model allocation is lost, once an EV platform goes to the US or Mexico, it does not come back. These are billion-dollar capital decisions made on a 10 to 20-year timeline based on policy certainty. If automakers decide Canada is an import market instead of a production hub, that decision is locked in for decades. And cheap imports don't just replace some sales. They compound over time. Year 1, 50,000 imported EVs. Year 3, more brands, lower prices, more market share. Year 5, Canada becomes the only Western country that let this happen. At that point, you don't lose jobs. You lose an entire industry. Ontario is ground zero for this. Auto manufacturing jobs are high wage, unionized, stable, middle class anchoring jobs. When these jobs go away, they're not replaced with equal ones. They're replaced with retail, logistics, service work, lower pay, less stability. That's a permanent downgrade in household income. And this is where housing comes in. Housing prices don't just depend on interest rates. They depend on income stability. When high-income manufacturing jobs disappear, mortgage qualification drops, job security disappears, household stress rises. What happens next? Some homeowners can't refinance, can't absorb layoffs, can't handle payment resets. So what do? They sell. And where do they go? They don't leave the market, they become renters. So now you have fewer good jobs, more people competing for rentals, downward pressure on home ownership, upward pressure on rents. This is how industrial decline quietly turns into a housing problem. Once this starts, it feeds on itself. Lower incomes mean lower consumer spending, weaker local economies, less tax revenue, and that means less infrastructure investment, more pressure on public services, more physical stress. At the same time, Canada imports more vehicles, sends more dollars overseas, and hollows out domestic production. This is how you weaken a country without a single dramatic headline. This isn't about EVs. It's not even about being anti-trade. It's about understanding second-order consequences. Canada exports can be rerouted. Auto manufacturing capacity cannot. Once we lose this industry, we don't just lose jobs. We lose income stability, housing resilience, economic leverage. And the people who feel it first won't be the politicians. It'll be Ontario households, homeowners, and renters competing in an already broken housing market. If you want more breakdowns like this, grounded in economics and not politics, subscribe because these decisions matter more than most people realize.